Now what we're going to do is we're going to take these ending trial balance numbers and we're going to make the financial statements from them. So we're going to take them from a debit and credit type format and we're going to put it into a financial statement format. So we're just going to be using the numbers on this side here. So we can see that the accounting equations in balance here because the total assets equal the liabilities and the owner's equity. So the liabilities and the owner's equity equal total assets. We can also think of it as assets here minus liabilities, the debits minus the credit, equal to 82,610, and the equity equals to 82,610. Therefore, it has to work. So it's a puzzle. We're just reframing the numbers into a plus and minus format so our readers can then use it without needing to know debits and credits. So we can start with the balance sheet. I like to start with balance sheet. So then we're going to say the balance sheet, we got current assets now. We're going to break out current assets now between current assets and property, plant, and equipment. So the current assets include cash. I'm just going to say that equals cash. And I could just copy this down. Just go boom, 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 down to prepaid insurance. So cash, accounts receivable, down to prepaid insurance. Okay. So it should actually go down to prepaid rent. So cash, accounts receivable, down to prepaid rent. Then we're going to say equals the cash amount here, and I'm just going to copy that down. So so we've got, that's the cash, the accounts receivable, computer, insurance, and so forth. There's our current assets. So then I'm going to sum that up, equals SUM, shift 9, holding down shift, up arrow. I'm just adding those up. So if we had it in a calculator, this plus this plus this plus this plus this equals that, that's what goes there. Okay, so then we're going to do the property, plant, and equipment. We're going to break this out because property, plant, and equipment is not a liquid asset. So we're going to break this out in a separate section. It's going to look something like this. We're going to take the equipment, and that balance being the 8.4. Then we're going to take from that the accumulated depreciation. So I'm going to leave this as a negative number. Remember, it's not a credit in this format. It's a credit over here. To us, it's a subtraction problem. So equals the sum of this and that. The sum, meaning this positive number plus that negative number, is like a subtraction problem. So the 8.4 minus the 420 gives us the book value, or the book calls it the office equipment net value, or book value. Okay, then we're going to do the same thing for the computer equipment. So here's this, and then we had a credit for accumulated depreciation. So we have the computer equipment of 20,008, and then the credit of 1.3. And if we sum that up, this plus the negative that, which is basically a subtraction, 28 minus the 1.3 gives us the 19.5. And then if we sum up the outer column now, we can say the outer column equals the sum of the current assets and the property, plant, and equipment. And that gives us the 86,870. If we highlight over here just the green part, we should come up with the same 86,870 because we have the debits minus the credits. The credits being the contra asset accounts, the accumulated depreciation. And we can call this the computer equipment net. Okay, so then let's talk about the liabilities and equity side. So liabilities equal, and then I'm going to point to this accounts payable here, and we could copy that down. There's only 3 liabilities: accounts payable, wages, and unearned computer revenue. And notice that these are credits, and I don't want to represent credits over here. I want to put it in a plus and minus, assets equal liabilities plus owner's equity type format. Therefore, to flip the sign, instead of hitting equals, I'm going to hit negative, point to the 2,000 credit, and enter. So I just flip the sign by putting a negative instead of a positive. I'm going to copy that down, and see that takes the numbers that we want. Then if we sum that up, we come out to the 4260. So if I highlight these, it comes out to 4260. Then there's the equity section. The only equity account we're going to have in the balance sheet is the raised capital account. And I'm going to do the wrong thing here just to show you the relationship between the accounts. If we said negative of this number, the 64, which is in the capital account, and then we added up the total assets, the liabilities, and equity. So I'm going to add up the liabilities and equity, not negative, of this plus this, notice we are not in balance. Assets do not equal liabilities and equity. And notice up here, here's our equation. Assets should equal this plus this. So why is it equity up here is this, and we showed equity of this? Because this equity account is everything, and we just have the beginning equity account. So what we really need to do is say the ending equity account equals what we started with plus investments minus the draws plus income minus expenses. So all of this is part of equity at the end of the day. And if we do that, we'll be in balance. So notice we can be in balance basically with just the balance sheet. We don't need any of the other statements because this is the double entry accounting system. But we want to know more about that number, meaning this only shows me a point in time. I want to know timing. I want to know how much revenue we earned. So instead of getting this number like we did here, I'm going to delete that, and we're going to pull it from the statement of owner's equity. So now we're going to recalculate the blue area, meaning I'm going to recalculate net income using these numbers. Then we'll recalculate owner's equity, which will bring in these two numbers. So let's do that. So we have the income statement now. And the income statement consists of revenue, which is this account. So I'm going to say, see how this is a credit? I don't want a credit over here. I want to do it with a plus and minus. So I'm going to say negative of this number. So there's our revenue. They had a separate revenue account here with a blank cell. So if you're in Connect and they have a blank cell, then that's okay. Just recognize that that's okay. Connect will have some blank cells in it sometimes. Okay, and then we're going to have all the expenses. So all the expenses start here, depreciation, and I'm just going to copy that down. So all we did was just say all these expenses are just going to go right here. Now in real life we might group the expenses a little bit differently than the trial balance, but in essence all the expenses will be accounted for somewhere in the trial balance, equals the 420, and I'm just going to copy that down. So these are all taking the numbers that we want because of Excel's relational ship. The expenses here, we indented it. Now we're going to add them up on the outer side, equals the sum of all these. And there's the expenses. Now we have revenue, we have expenses. So how do we calculate net income? Equals the revenue minus expenses. So I'm going to hit enter. There's the net income. Should be the same as this. But now this is a positive number because we're talking about plus and minus, this being a credit when we're talking about debits and credits. Okay, so now we found a home for all of these accounts. I'm just going to highlight them. We found a home for those, and we found a home for basically all of these. The only thing we haven't found a home for is these two. And we're going to find a home for those by doing the statement of owner's equity, which is over here. And the statement of owner's equity is going to start with the owner's capital account of Ray Capital beginning. So we're going to start with the beginning balance and Ray's capital account. Now, normally that would be this number here, but because the beginning balance will be rolled forward from what was owed to Ray as of the end of last period. But in this case, this is the first time period, therefore we started at 0, and Ray had invested that amount. So Ray invested it, so we started then with 0 in the capital account. Then Ray added, so we're going to add owner investments, and the investment was, I'm going to put a negative of this number. So the investment is going to increase it, and then we're going to say add, what else is it going up by? It's going to go up by net income, which is what we just calculated. So I'm going to say that this equals this number. And I'm actually going to make this green. The green cells are showing the relationship between the statements. All right. And then we're going to say less draws. And I'm going to say that equals the last one that we haven't found a home for, being draws. So now we found a home for all of our accounts. And so we'll calculate the ending balance now. The ending balance equals the sum of the beginning balance plus the investment plus net income. And I'm going to represent, the book represents draws with a negative. So I'm actually going to do that, and I'm going to make this a negative. I'm going to put a negative in front of it. So if I recalculated it now, we would say it equals the sum of this plus this minus that. And that gives us the 82,610. And note that that 82,610 equals this number here, which is all the blue areas. So if we take a look over here, we basically summed it all up. We said the beginning balance plus the investment, less the draws, the debit, plus the income, minus the expenses. And that equals the 82,610. Or this number plus this number, I'm holding down control, plus net income. This number, the 82,610. So now if we go back to the balance sheet, that's really where we should be getting this number. Remember when we got this number, we summed up this. It's really if I say that equals the number from the statement of owner's equity, then the ending balance is in balance.